Okay, great. So, good evening once more, and you are welcome to the Get Finance and Investment Tips webinar series. And today we would continue from our last webinar, which is on still the basic of stock investing. We've also, reason why we're starting with stock is based on the interest that we've seen around stocks. The community is not just for investment in stock, it's about building a portfolio, building your investment across different asset classes. And yeah, for this, we just to reiterate that our vision is to build a financially empowered community where individuals develop a strong investment mindset, achieve financial freedom, and create lasting wealth for future generations. So, with with series of the webinars that we will be holding, and as well as the personal class sessions for people that also reach out personally, we believe that we will all grow together and we would all be able to build wealth that lasts, not just building, but wealth that lasts. So because of those that were not within the last webinar, I will just spend 5 minutes to discuss a bit about what we discussed at the last session. This webinars, we have new people join us. It's going to be a continuous series so that it creates opportunity for everyone to be able to learn and we'll be able to at least build well together. So today the focus is on stock, and when we say we talk about stock, which is it has to also do with equity. Some people call it equity, some people call it shares. So whichever nomenclature that is being used. If you go deeper, they have different meanings, but for the sake of a basic class, they can be used interchangeably. And we all need to know that for stock investments, it comes also with risk. So it means that you have to invest intelligently. And we won't be able to go into details of what stock is. We've done that at the last session. If you also missed that, you can also go back to the last webinar to watch. And if you have specific questions, target here is to just spend 1 hour on the webinar and take questions. There are a lot of questions that will be on people's mind, and so that we are more specific and everyone will be able to take something away from this webinar. For the Nigerian stock markets, we need to know, if you are new, the market opens at 9:30. Active trading starts at 10. For some platforms allows you to place trade outside the market. So you place your trade, maybe it's a period where you are very busy, you may not be able to place trade within the market hours. You can place your trades, and we'll see how you can place trade at limits and the likes as we progress. And for the US market, currently the US market opens based on the time difference now, opens at 3:30, which is 9:30 a.m. Eastern time, 3:30 a.m. Nigerian time, and closes at 10 p.m. Nigerian time. So sorry, so I want also that we're able to cover. So we'll be starting today. Focus today will be starting on investing strategies for stocks. So for when you invest in stocks, there are different strategies you may want to adopt. And what is mostly recommended is buying for long term. Stock investment is for long term. So I've seen situations where people ask, I have this my money within the next 3 months, I will need it. Which stock can I put it and it will give me? You are taking a risk. So you need to first know that it's for long term. If you invest consistently over the long term, you would see that it will deliver value for you. So for one strategy, you buy and hold. Buy and hold strategy means that you are buying for long term. you believe that this company has tested different seasons, has tested different times, and you can be comfortable to hold them. So when we look at the stocks within the Nigerian market, for those that have been in the market, you see the likes of GT Bank. They have tested the market over time. So if you have bought GT Bank, even during the crisis, by the time you factor in the bonuses that you have received and the dividend that you have received, it will still give you, the return would have still been very impressive, as if you have been holding GT Bank, given the bonuses that they paid over time. So there's the buy and hold strategy. So when you're buying to hold, it means that you need to also be careful about the entry price. So you would see that for some of the posts that we put down to say buy, we look at what the entry price is. When Aradel was still at 600, we were all targeting to buy it at between 500 and 550. And before it reversed, it actually touched almost 500 before it reversed when their result came out. But one thing we need to note, and one strategy to practice. So if you are not exposed to a particular stock and there's a range in terms of price that you should buy that stock, the first thing to do is you can take a bit of that stock. So if I intend to spend 10,000 naira, for instance, on MTN, I may first of all invest 2,000, because we would say as we progress, nobody can accurately gauge the bottom. So you can look at a comfortable level based on, sometimes I use technical, so I'll look at how it's traded over time, market news, sentiment to determine those prices. But you cannot accurately know exactly where it will turn or when it will turn. So if you buy with 20%, 30% of what you have in mind to put in that particular stock. So if it's NVIDIA, for instance, and we say, you would observe that to optimize our upside potential, what do I mean is that for us to buy at the right price, we try to buy only when there's major sell-off or when there are sell-offs in that particular day. That is for us to take advantage of the market. So when we look at NVIDIA, for instance, yes, certain people bought at 130. We have been talking about at that price, but when it came to about 119, 120, that was like an opportunity to buy more. And because yes, there are news around, different news, we look at factors that can drive, that also drive stuff. But when you are buying to hold, you are buying for long term. Index investing. So for those that don't want to bother themselves with what is Apple saying, you would see we post Magnificent Seven. This Magnificent Seven, these are the top 7 companies that, yeah, so you can also drop your question. We're going to use full 1 hour to answer questions. Index investing, you are trying to buy a particular index. Some of the top index that we recommend is Vanguard 500, VOO. It covers the top 500 companies in the US, which means that we did an analysis that shows the last 5 years, it has returned an average of 20%. They may not move and you may not gain 100% at once, like some stocks may deliver. Tesla, for those that bought Tesla even less than 6 months ago, it was around 200. They've gained close to 100%, right? But the index may not deliver that return. And when a particular stock is also going down, because it is not all the stocks in that basket that is going down, it would not impact significantly. So it helps to build some stability. I would strongly recommend that you should also have Vanguard 500, VOO, in your portfolio to create a bit of stability. When you look at it, it covers the top 500 companies in the US. On this US stock exchange, there's over 8,000 companies. So for them, they have used the criteria, the most capitalized, most liquid, and based on performance, the company of the top 500. So except if there is a general negative sentiment in the US, and It's been proven in the last 50 years, even if there's a recession, the government will, within 1 year or 2 years, it will always reverse. So you have nothing to fear. So there's a need, apart from the specific stocks that is being recommended, there's a need to also invest in the ETFs. There's the Vanguard for the growth. If it's a particular sector that you think you are interested, like we have been all tracking computing, quantum computing sector, for instance. What I may eventually do is I may just buy the index because it's a new sector. I don't know which of the sector, which of the stock may perform, which one may drop along the way. But if I buy that sector, I may not gain 1,000% like buying specific stocks, but I will also not lose that if I buy those ones that are not, that may eventually drop along the way. So it's very important to also have index. Sometimes there was a time, even in my portfolio, close to 50% of my total stock was the Vanguard 500 KPQ. It's just to create stability. You know what? We are not planning to just turn $1,000 to $5,000. It's high risk. It can happen over time. There were stocks last year that gave us 500%. But that's not like the target. It doesn't happen all the time. It's high risk if your target is there. So index investing is very important, that you need to have some of those index in the ETF in your portfolio. Dollar cost averaging, we will speak more on that, and we will share example how you can use dollar cost averaging. Active investing, this was only recommended for those that are already familiar with the market. Active trading, it requires a lot of time. You can lose all your money. It's been proven over time in the trading world that almost 90% of people that do day trading, very active trading, trade options and the likes, lose their money. That's also what happens in forex if you don't understand it. So this active investing, you need to you need to be very comfortable in the market, first of all. But if you have to do it, like what I do, maybe about 20% of my total portfolio, for instance, is active. You would see that like when Mara went to about 21, that I bought at 18, I sold half. Now it's back to almost 19 plus. If it goes down, I'll buy more. There are some stocks that I've tracked that I've seen the trend more than 20 times last year. It went up and down, up and down. So when Sean, that one of our top long-term speculative stocks, when we recommended it, we started buying it at $3. Then there is time it went to $12. Currently is back to 15, but it got to about 22. There's also one principle you need to note. If you are playing for some short term, or even if you say it's long term, and you are seeing 1,000%, you are seeing 500%, try to take some profits. There's always the saying that you don't require any excuse to take profits. And how do you take profit? So if you have bought a share, or you have invested $100 in a particular stock, for instance, and that stock is now $20, you can decide and say you are selling 30 or 30, it's now 120 based on market value, it's now 120. You can decide to take $40 from that. It means that you are taking $20 from your profit and $20 from your capital. Sometimes it may also go down. But why? Because we are trading long term, you are not selling all, except you hear that the news and fundamentals have changed about that particular stock. It's not a sector that you think that there's prospect for it again. So once you discover that it's not a sector that you think that there's prospect, then you can sell and take your profit and move on. Growth investing, this carries a bit of risk, and that's why you see our long-term speculative, we call them long-term speculative stocks that we recommend, is part of growth investing. They are trading at a bit of discount, or it's also a company that is just evolving. Some of them are currently making losses, but with a potential for them to grow. If you also check the Nigerian stocks, the likes of Ella Lakes, Japan Oil that we're recommending, we have looked at the sector where they play. But when you are going to do it, you don't put the major part of your funding into some of these stocks. We have recommended over time that don't let for this speculative, long-term speculative or active trading, between 20 and 30% should be the maximum cap you should have in your portfolio. The reason why we're emphasizing this, we want to come back in December. This is the second month that when we're asking people about their investment journey, your portfolio should perform. Yes, if the market may crash, even if the market goes down, there's strategy would adopt that within the next 1 year, things will also still turn around. These are proven strategies over time. So growth investing, these are stocks that they may be making losses, but there are potential for them to grow. And income investing, you want stocks that will be giving you dividend. You can also invest because of the dividend, and you continue to get dividend. The banking stocks pays dividend in Nigeria, pays dividend twice in a year. We call it interim and final dividend. So you can also benefit. You can also benefit from that. So you can also note that. So this based on a lot of some of the questions that have been asked, and that's why we've also included this there. How do you use order types? When we say about order, so you want to place order, either you are buying or you are selling. When we talk about market order, it means that you are, from the word market, you are allowing, you are putting your trade to trade at whatever price people are willing to sell in the market. You cannot fully determine exactly the price at which people can sell, but you can see, I'll show us when you look at even on the Investor app or whichever platform you are using, there's what we call the bid offer. You would see what people are trying to buy and what people are trying to sell. That's at what price are people trying to buy, or at what price. Let me see whether the slide is here on that. Sorry. I'll just come back. So this, for instance, this is like an order book. Some platforms, it may not be this explicit, but you would see the total. The blue line, or when you see bid, is that people are trying to buy, and they are putting the price at which they want to buy and the quantity they want to buy. This is what is showing in the market. And the other part is offer, people that are trying to sell, and you can add at different prices. So when you put in a market order, so if you are trying to buy, for instance, you are trying to buy, let's assume market is opened and this is the board, that's the overall markets. This is what you have, the board. You may not be seeing this, but back end, this is what is happening. So when you put a market order to buy, it will look at the best person that is trying to sell. The exchange is to help. The exchange is to help to match trades. What the exchange is doing. Someone is saying you cannot see the slides. Please, can you see the slides? And the rest, please see the, okay, yes, so they can see. Maybe you want to exit and join again. Yeah, please. So you would observe that when you are trying to, if you place a market order, for instance, when you are trying to sell, it will match it with the best person that is trying to buy. So if I come to Investor app and I put sell MTN 1,000 shares, I'm saying sell. So for them to match, for the exchange to match my trade, it's going to match it with people that are trying to buy. So based on what we can see here, the best person that is trying to buy has quoted 253.50. So if I put 1,000 shares of MTN, it will sell, it will match it with 1,000 out of this 39,000 that we can see. So you know that a lot of people are trying to put market order at the same time. So this 253 that you are seeing here, sometimes It may change before your order gets to the market. That what you will find is 255. So you may be surprised that you were seeing 253 when you check, but because it's a market order, and if it's very is a stock that is very active, it can be 255. You may not be able to determine the exact amount that you will be, exact price that you will get it. It's same thing when you are trying to sell. You may not be able to determine that. But if you think that you are comfortable with the range at which it's trading, you can just sell at whatever price, at the market price, and move on, especially if we don't have time, because sometimes you can put the limit order, which would go into, and market may not get to that. When we say limit order means that you have a specific price in mind. So if I'm trying to buy or MTN that we just used now, and we were all targeting to buy then before it moved at 225. So I could put in my order, a limit order to buy 1,000 units of MTN at 225. I put it as limit. Don't buy it more than what we mean. If you are putting a buy order, you should not buy it more than 225. If incidentally market is lower than that, it will buy it lower for you below the 225. If let's assume it's very active and market goes lower than that, it will buy it below. It doesn't mean it doesn't mean that it doesn't mean that sorry, let me just repost for someone asking for it. So it doesn't mean that it will not, the market will not sorry, just a it doesn't mean that your order would be purchased at the limit price. When you say limit, we are saying don't buy above this level. We are saying don't sell. If when you are selling, don't sell below this level. If he finds a better price, then it would execute the trade at that level. And when you put it for days, so for some platform, what you will find is 7 days, some 30 days, that I want to buy MTN at 225, and I'll put it for 7 days. Every day when market opens, it will keep checking the market. It will keep checking the market and allow and see whether that price, it can get it at that level for you. That is what the exchange, the plan, what the exchange is trying to do. That is what the exchange platform is trying to do. So day orders, you are putting it for a day. When you say day orders, at the end of that day, so if I say day order today, I put in an order today. At the end of market at 2:30, that order will be cancelled. It means that you have to come and re-enter that order the second day. If it's good for certain days, for instance, you put it for 7 days, you put it for whatever number of days that you have in mind. So that's the difference between that day order and limit order, and good for certain days. So you can, we all note the difference. So for those that trade US stocks, for most platforms, because it is fractional shares, if you are not buying a single unit of that particular share, you won't be able to place its order. If you are not buying a limit, so you will be forced to buy at market order. When you check a lot of other platforms, you will be forced to buy at market order. So you place your trade, you can place your trade in the market before market opens, but it has to be at market order because you are not buying particular unit. But if you are buying more than one unit, you can always use the price to determine, you can use the limit order to determine the price at which you want to buy. This is also good that we also note it, because I've also seen questions around, after I bought this stock at 100 naira, by the time it was closing, it still closed at 90 naira. How did the exchange, how did the market sell to me that I had to buy at above what the price closed? So there are some rules, so I won't go very technical, around the market, based on how the price of a stock can move. So what you call the tick size rule, which means that stocks that are the amount. So if you are trying to even place your limit order, so for instance, you want to place five, you want to place order for a stock that is above 5 naira, for instance. You cannot place order for 5.01. So you can see this, because when some people say their orders are rejected, you can't place an order for 5.01, because what you can only place order for 5.05, 5.10, 5.15. Any stock that is above 5 naira. This is the the multiple, if I use that word, multiple by which it can. That is the multiple by which it can move. So if it's below 5 naira, you can put 5.01, 5.02, 5.03. Your order will be submitted and it will be matched. And when it's above 100, you would see 100.1. So I cannot put 100.05. 100 point, it has to be minimum of 0.1, 100.2, 100.3 when you are trying to buy a stock that is above 100. Secondly, the exchange, to create a bit of stability in the market, there's a limit to which the number of stocks that can change a price. So when you see, let's say Dangote Cement, for instance, that trades above 100 naira, before the share price of Dangote Cement would change, someone must trade minimum of 50,000 units. So there must be a transaction that someone is trying to buy 50,000 units at once. If the stock is below 100 naira, someone must buy 100,000 units at once before that price will change. So, you know, in our earlier webinars, we've said the maximum amount a stock can move in Nigeria is 10%, and going down to is 10% in Nigeria. Abroad is not capped. It can go up by any level and come down by any level. So to control that, at the end of market, someone cannot just come to the market in Nigeria to use 1,000 units to change the price of a stock. So you must be willing to spend minimum of 100,000 units to change before that price will change. So let me put it in a more simpler version. So if the stock of MTN is 200 naira, for instance, and all of us here, we're about 92 here, all of us here now, we're trying to trade MTN amongst ourselves. MTN shares, because it is above 100 naira, if none of us trade 50,000 units at once, if yesterday it closed at 230, for instance, and when market opens, all of us, we may continue to trade. Maybe when market opens, we may be trading at 200. Ayo buys 1,000 units. Grace buys 1,000 units at 200. It will continue, trade will continue at those levels. But when markets close finally, because none of us traded 50,000 units, the price will still close at 230 naira that day. So when you place your trade and you are now surprised that you were trying to sell and you sold at 200, but market still closed at 230, that is the dynamics of the market. And that is why sometimes when you are buying stock, buy stocks that are also very liquid. They also have their positive. For those stocks that don't trade that amount, it also takes time for those stocks to drop. If people don't have the money to move those stocks, it means that they cannot trade up to that. They can't trade up to that level. So it's important for us to note this. I'm sure this would have also answered a lot of questions of some people that have been wondering when they buy, when they try to buy, when they try to sell, the price at which the stock is matches is different from the price at which it closes. So there will be time to take questions. If this is still not clear, I'm happy to still explain it again. Um, so now looking at, with each time I say buy gradually, which is the dollar cost averaging, buying gradually, because you cannot easily determine the exact time markets will get to a level. We were looking at MTN, we say, okay, comfortable level, buy at 220. But if you are buying over time, there was a time it came to less than two, as at December, it was around 170. So you buy, when we say buy dollar cost averaging, you are buying gradually. And one of our principles that we want everybody to imbibe is having a specific amount to invest on a monthly basis. If your funds comes in quarterly, also fine, have a specific amount that you would be putting in the market on a monthly basis. So it helps you to dollar cost average. So if it's around December, you bought MTN, for instance, at 170. In January, it moved to 200. You buy small again at 200. In February, it moved to 250. You buy again at 250. Yes, at the end of the day, your average cost may be around 200 or maybe 210. Assuming it's also dropping, it also gives you the opportunity to also buy over time. But beyond that, it helps with discipline. So if I know that every month there's a certain amount, even for me, that I've set aside, that I've been doing for years, that I put in stock for me and my wife and my kids. So there's a certain amount that I set aside. I've been doing consistently. So once when we talk about budgeting, there are other classes that would look at all those things. You need to plan. If it's 5% of your income or of your savings you want to be putting in stock, set it aside. You need to know. Don't just wait for don't just wait for what is left. Just be able to determine what you want to be putting and be disciplined about it. So when you do dollar cost averaging, whether it's weekly, monthly, there are platforms that you can auto set it, that it will automatically be buying a particular stock for you on a monthly basis. So like I mentioned, Vanguard 500, for instance, these are stocks that you can be buying on a monthly basis. It builds over time. So if you look at the compound annual growth, so with an average of 20% every year in the last 5 years. So if you have put in $100, your money will be around $200 now. And to achieve $100, divide it by 12. So it means that you are doing an average of $10 every month. So if you do $10 every month, that's $120, right? $120 in 5 years, that's $600. With the increase that you have seen, that fund will be close to $1,000. When you also, we look at the compounding, when you buy, you also invest the dividend that you get. There are platforms that allows you to invest those dividends. So you would see that the magic is that consistency. Before you know it, you'll be able to boast or stock worth $1,000 by the time, if once you are consistent. So that dollar cost averaging, it's important. So when we buy, it helps you. When we say this stock, we're looking at it. First of all, you may, and on red days, I want us to, because we always emphasize that, always just target red days will always come, and that is stocks for you. Don't get, we look at some of the mistakes that people, don't get so overexcited that you think that you would miss out. Red days will always come. Worst case, what I do at times, if I'm not sure of the direction, is I can put 10% of what I intend to put, or 20% in that particular stock. I just buy that one and hold it. Then wait for the red days. So in case, even if it doesn't go down again and it's going up, I'm already in. And whatever I've invested, we say at all, I would still be benefiting from that. So we need to note that we're talking about Dangote Cement now, because it started trading less than 2 weeks ago actively. A comfortable level of 360 have been set based on a projection. And please, most of this is not like a direct investment advice, because we are discussing and educating ourselves. So when you are taking investment decision, it's also your responsibility. Our we would use based on our experience to guide you, to ensure that at least um to for you to get value in what you are investing. But it is also your responsibility when you are investing. So please just also note that we are not here to say we are guaranteeing whatever you are going to get, but where it's not done professionally. So please, please also note that. So when we say Dangote Cement, for instance, because we've looked at their result, their 9 month result, it's been very fantastic. But because the stock suddenly moved, that was last year or 2 years ago, to almost 700. So it's getting to a level that people are comfortable to begin to buy it. So what I would have done, what I recommended is that just buy a certain part at that. Now it's getting very sticky. At when we say sticky, the price is just hovering around one level at 380, 390, 380, 390. Nobody's. So I would buy at that level. And if I see it at 360, I will buy more at that level. But let's assume that after, we call it consolidating. When we say something is consolidating, so people are just buying at that same level. Over time, if a stock is strong, after consolidating for a particular period, it moves up. After trying to people buying it over time, it moves up. So for you not to move and to lose out of it when it starts moving up, then you buy. I would advise that you always avoid jumping into a moving train. So you see, maybe because of a positive result, the second day, the stock is moving up, everybody trying to buy. Most times, it's always a 50-50 game. You can jump in and the second day it starts going out. So it starts going down. And sometimes you can be lucky it starts going up. If it goes up, it's fine. But if it goes down, you have lost money, because you need to always protect your capital. And if it's going down, you must be prepared to average down, because you have jumped in. So you won't jump in with all your capital. This is some of the things that the dollar cost averaging helps you to do. So you see, for instance, see how does dollar cost averaging works. So let's say you decide to invest $100. It can be $100, it can be $10 every month into a stock or ETF. You see, in January, the stock price was 50, like I painted, you bought 2 shares. In February, it was 40. In March, this was the level. At the end of the day, for 6 months, if you have been consistent, your average price would be around 40 naira. You will see that it helps you to reduce the stress of trying to gauge the market. And consistently over time, it will build up. It's been proven. I will try to also show us some charts. I'm trying to look at the time to also show us some charts. So over time, it will build up. So you need to adopt that gradual entry. I know someone was asked the question around, should I buy if I put I have 5 million naira or something, should I buy in one quarter or buy at once? You don't buy at once, because especially we are dealing with stocks. It's not fixed income. Markets current on Monday now, we're expecting, because of all this tariff news going around, which also started before market closed. Market may be down again. So you need to spread it. If you are just coming in for the first time, you can spread it over maybe 1 month or 2 months to take advantage of the dips in the market. So when you take advantage of that, it will help you to normalize your average price, just like we can see on this table. So don't buy at once, buy over time. There will be opportunities. That there was a time when I saw Nestle at almost 675 for my kids portfolio. I rather than, if let's assume that it's 5,000 naira, for instance, I do monthly, that period I had to put in something significant, because I know that this level, I'm getting this stock very cheap at this level. When you see some stock at a particular level, when Tesla crashed to about 200, then it was like, this is very cheap, because we know it's just a matter of time. EV cars is still more efficient. It's just a matter of time. So these are some of the things that it helps us to look at. I've discussed this. This is bid offer that you need to get used on. We look at the Afrinvestor app, you would see it there too. They list the bid, they list the offer. It just helps you to have an idea if you want to place a limit order, and you will have an idea of how much the price at which those trades will execute. And I just thought to throw this in for especially for those very new in the market. When we say when stock price, the open price is most times the open price is always the closing price of yesterday. You know, for those that are doing accounting, you say balance brought forward, balance carried down, balance brought forward. So yesterday's closing is today's open. So the stock may close at 10 naira yesterday. The open you will see is at 10 naira. Then you see the high and low. You know, transactions are happening at several times. This is a market. Thousands of people are trading at the same time. People might have traded that same stock at 12 naira, and some people have traded it at 8 naira. It just gives you an idea of when you look at the trades, you look at the price, or you are looking at price list, it gives you an idea of actually some people bought these shares at 8 naira that day. Maybe you bought it at 10 naira, for instance. And some people also even bought at 12 naira. And that's why some people are interested in the weighted average price. So you want to see what the weighted average price, maybe the weighted average price is 10 naira 50 kobo. Most people don't want to buy above weighted average price, especially professional traders. They check the weighted average price before they place their limits. They don't want to buy above it. When you see the close, at the close of markets, after market has closed based on the difference, you know, I've spoken about the units that can move the price. If it has traded at that unit, it will close at the last trading price. But that close price is the price at which most times the stock, the final trade that was done, that met that 100,000 unit or 50,000 units rule. That's what we will close. 52-week high is the 1 year. 52-week is 1 year. It's like 1 year high. So sometimes you see it on price list, or you see it gives people an idea. In the last 1 year, this stock has traded at 20 naira, and today is 10 naira. It shows that it's actually trading very cheap. And sometimes it may even trade at you may see it at the 52-week low, or you have an idea of what is trading at 52-week low. It helps you to know whether you are buying very cheap, or sometimes you see Apple shares trading at 52-week high. It means that you may want to, if you are supposed to invest $100 at once, you may want to say, let me first invest $50. Let me see whether it will come down, because this is all-time high. A lot of people that bought it 1 year ago at low prices may be taking profit. So it gives me opportunity. I was talking about last price and last quantity. And this part now is to we have been seeing results. So people, most of the companies have been publishing results. But in Nigeria, there's what we call audited results and unaudited results. Audited is an independent party has checked it, they verified it, and before they release the results, and they can pay dividend. Unaudited result is like management account. It is what the company think that this is their performance. When audit comes, sometimes there can be variation. So for analysts that value stocks or do proper valuation, sometimes they place less reliance on audited reports, because things can results can still change. they place less reliance on audited results, because when auditors come, they can say there's a provision that they did not agree to. Sometimes it happens. So when you see results, always first confirm whether it is audited or unaudited. For companies that have integrity, they try to ensure that they are audited. Unaudited is not significantly different. Is not significantly different from what I would say from the final results. You know, you have told people that in your unaudited you made 100 billion. You can't come and tell us, when people have projected based on that, you can't come and tell us that, sorry, after auditors finish their results, we now made 50 billion. That's like misleading the market. In some other climes, they can even sue you in some other climes that why are you have misled the market. So there are two major options that companies have been given. Two major options that companies have been given in Nigeria. They ask you for option one. You can release your full year or audited results within 30 days. Within 30 days, you can release your result within 30 days. That's the unaudited one. You know, that one you are not, where with auditors, you have not audited the report. So release it. You don't have any major, release it within 30 days. For those that choose to release it, they have 60 days to release their results. So if you don't release it in 30 days, what we'll be expecting is your audited result for 60 days. So for those that are released unaudited, within the next 60 days, they also have the obligation to release their results. You also have the obligation to release their results. So that's really very, very key, that we should note that when we see results, because you know the essence of what we are doing here is to make us knowledgeable. It's not about just coming. We are not just saying come and invest, or we are just investing MTN. You don't know some things around that you should watch for. It is very important that you need to note that. So this what this is just saying, most times I use this a lot for those that have been following, that like what Warren Buffett is saying is that if you are buying a stock, if you're unable to hold the stock if you can't hold it for 10 years, don't even think of holding it for 10 minutes. So when you look at some of those stocks we say has long-term fundamentals, Dangote Cement that we are recommending, they are in the cement industry. Construction is going on. Real estate is now going to be like the third largest space. What do they use? Cement. What cement? So when you are buying into that space, unless they tell us that people should stop using cement to build houses, or there's an alternative, within that space, you have nothing to fear within that space, because you have nothing to fear within that space. So you will be happy to hold it for a long time, especially when you see it and you are buying it at a very cheap level. So you are not speculating. You are not just buying to run away. So you must understand the business. When we're recommending MTN, for instance, we said we believe that it was a matter of time. So we've been saying it since like last half of the year. So you would see that it wasn't a short-term play for us. Since the last half of the year, we have been talking about their result was negative, but we believe that when we saw their 9 months, which was positive, we saw their 9 months and it was positive. So we believe that it's a matter of time that they would move to a positive terrain. And if there's a tariff review, so now you can see that with the tariff review, if you even just do a simulation of an average of 30-40% on almost 3 trillion they've made in that year. So That will show you that there's potential. MTN, they pay out almost 90% of their dividend at times. Next, they pay it out as dividend. So once they start making money again, and as long as government has not banned them from operating in Nigeria, you have nothing to fear on, because all of us on this call are using data. And if we look at the amount of gig data we have used at the end of this call, we've made money for either MTN, Airtel that are listed. So that is how you view it. So it's very key that we know that. So now we want to quickly look at some of the activities that drives the news. I'm looking at time. Sorry. Okay. Let's we may not be able to also finish this. These are classes that takes weeks, but would, as God also permits us with time, would ensure that we make this regular for people that want to also learn. For company, when we talk about company activities, so the activity, when a company is involved in a particular activity, it has a way of influencing the stock of that company. Like we all saw that if a company introduced a new product, so the oil and gas last year, because they all bidded for license, and some of them they got it. At the end of the day, it impacted on their, even Ohando, it impacted on their earnings. So when you see a certain policy that is around a certain company or in a sector, then you begin to watch what is going to happen within that space. So while we are currently trying to see which are the sectors now within the US market, Donald Trump is now the president. In his first tenure, were the sectors that he focused on? What are the sectors that he may want to provide funding for now? So, before the DeepSeek news came out, Donald Trump already set aside about 500 million or 500 billion, set it aside or 50 billion rather, set it aside for this sector, for the AI sector, for development. So when you hear news like that, it means you now go and look at what are the companies that may benefit from it. It will influence it. Sometimes, if you have the time, you may want to see if they lose a major customer. For those that trade and invest in the US market, there's always a lot of news. When they sign up new customer, like Sean, part of why we were buying it, there was a time they had a collaboration with Honda, had collaboration with Total, some of these car making company. So it gave us a bit of boost that they are signing up more customers. When you hear that they are expanding into new countries, if you look at the opportunity, those things can influence the activities. Beyond that, financial performance is also very important. When you see, especially in developed climes, they are very responsive. When you see positive financial performance, positive news, you will see that the results goes, the price of that stock goes up, and the other way around. And when they announce dividend, it also goes up. This part, we need to spend a lot of also time on this particular slide. So we look at it as we progress to see how we can also benefit, because I know for some of us, you want to know, how do you select those stocks? How do you know when to buy those stocks? These are qualitative and quantitative measures that you can use to determine those stocks, especially in developed climes. So data is very key in developed climes. So as we're expecting, like last week, GDP data was really very key. People were really very keen to see the GDP data, to see whether the economy is growing. If it's not growing, the stock market does not play in isolation. So what people were estimating, that if it's not growing, it means that it may force Fed to cut rates. And if they cut rates, the finance cost of companies that are performing on the stock market would, their finance costs will go down. And what happens if finance cost goes down? That means their cost of their profitability will improve. And that is what will lead to increase in the share prices of this company. That's what will lead to increase in the share price of this company. So all those data actually matters. There's something I want to, so that we covered some of these common mistakes. I will, one or two slides that I've dumped would also take it maybe in previous class. I'm looking at time because I want us to be able to ask questions a lot. Some of the common mistakes that for new investors, for those that are new, when you say you are trying to time the market, nobody can easily time the market. And that is where the dollar cost averaging we spoke about earlier comes up. It's very important. Dollar cost averaging. When you see a stock that you believe in, don't put all your money once in that stock. Try to buy it over a particular period so that you are getting it at the best price. Diversification. Most people, I've seen people, because we say this stock is speculative long time and maybe has potential to double. You go and put all your eggs in one basket. You go and put, you need to diversify. Like, you can't have all your stock in the AI space. So see what is happening within the AI, for instance. You need to be able to spread it, which is some of the things I'm also even looking at based on the recommendations that we'll be making. We're going to also update the recommendations. You need to, it needs to be spread across different sectors. The banking sector, JP Morgan, Morgan Stanley, these are stocks that have also tested the sound of time. It's been very defensive and they have been doing very well. So those stocks, you have to diversify. Buying ETFs is also diversification because you are investing across different stocks. Buying equity mutual fund is diversification. Don't just buy one or two stock and especially they are in the same, you now say they are in the same space. You are running a very great risk. You don't do that. You need to diversify. You Some people also they ignore the power of compounding. When we say compounding, when you get the dividend, so for instance, for my kids, there's a specific account I've opened. When they pay dividends, they have like about 10 or 12 stocks in there. I wait for when all the dividends have come in. I move all the money in that account. I move it back to their stock account and use it to buy more shares. So your shares will grow faster than spending it. But if you need money, there's also no crime. The essence, some people invest for those periodic liquidity. So if you need money, you can invest, you can spend it while you know that you are waiting for capital appreciation. But if, like, our focus is we're trying to grow wealth, we're trying to build wealth. So what we have set aside, you are putting down long-term money. We're trying to grow it faster so that when you get to retirement or you get to a particular level, if not even retirement is long-term, if you get to a particular level, some of the gains that you are getting from this can fund your lifestyle. So we've seen it. And some people bought stocks at a particular level. There was a platform that I think someone was making a comment and we're discussing about stock and bought Seplat then when it was listed. Was it at 200 or 400 naira? And he said that was what he sold to send his kids to school abroad for masters. Seplat is around 5,000 naira now. So less than, let's say, 5 years or 6 years ago that it was listed, or around that time, you would see the gain. So at less than 500 naira, but was long term, sold it and used it to send the kids school abroad, not Nigeria. because that was like almost, if he had put 1 million then, so that money at that rate, almost 10 times, would be 10 million now. So let's imagine he put 100 million, he would easily have 1 billion. So you would see this is how wealth are built and are made. So you need to have it. You also need to, if you are, especially if you are short term, need to have exit strategy. Don't buy some of those stocks that we say with fundamentals, long-term fundamentals, because we are speculating. We've seen it. SMCI, for instance, that gone down, went as high as almost 50 within. It did almost 100% within 1 month when we bought it. It's back down now to almost that level. So if I did not take profits, it means that I would have just seen the price go up and at a level it drops. It drops, which will not be good. You need to also look at or follow research. If you are new, the essence of this community, we expect people would over time ask questions, even as we also train and build ourselves. People will also be able to respond based on their experience that they've also learned over time. You will see it. Some of you may be wondering why we post those prices often. I believe that there will be some people, even if you are not investing, it is good that you see the trend. So when we have mentioned that we should buy, there was a time for almost 3 days we're saying buy Apple and Tesla, buy Apple and Tesla. And after 3 days, Apple shares jumped for almost 3 or 4 days from that level. We'll say buy Amazon. So that even if you are not investing in stocks, but you are also following and you are seeing the reason why we recommend some of these stocks, you may build confidence over time. You will build confidence over time and you will you may now want to take action. But we want to encourage everyone, even if it's 10% of your entire portfolio minimum, have it in stocks. If you are so used to fixed income, yes, fixed income is good, is safe, but take a certain part of your total. If you have 1 million saved, you can decide and say 100,000, 50,000 for Nigerian stocks, 50,000 for US stocks. That's the amount you want to have. And as you grow your portfolio to, you increase that amount. And as you have confidence, you see it, then you continue to increase it. And last part, I'm going to stop with at this level so that I can take questions. And if we don't have more questions, I may also come back to maybe to touch on some of the slides. I've spoken about diversification, risk management. So risk management is key. You know, the investment we are doing carries risk. Excuse me. They say equity investor are the most times they are the one that carries the risk on their head. If a company shuts down today, debt holders will be paid first before equity holders. So you don't want to put all your eggs in one basket. If you're in the banking space, you don't want to just hold GTB alone. When you looked at what happened in 2007, 2008, even some of the banks that we thought were strong went under. Yeah, we don't foresee that again, but you need to diversify. Don't put all your money even in the banking space. We've been speaking about one of the sector we need to look at is the agri sector. Agri sector, Presco and Okomuhoi. These are money printing companies. Based on even news that we hear, people pay 1 year ahead for their products. So you would see, go and check their performance in the last 6 months, in the last 2 years, 3 years. They continue to grow stronger. Presco is also going to Ghana, going into Ghana. So these are stocks that, as long as there's demand for their product, you diversify. You are in the cement industry, you are in the agri industry, you are in the telecoms industry. That is diversification. We've spoken about dollar cost averaging. You don't just buy at once. I think that this would answer the question of someone person asking, should I buy at once? You don't buy at once. You need to dollar cost average over a particular period. Investing in ETFs, we continue to emphasize that it creates stability. When you want to, if you are doing short term, set realistic target for yourself. When if 20%, 30% is your target profit on your short term position, take it when you see it. So instead of you waiting for 100%, so what we've seen over time in the market, if you do 20% 5 times, it's the same 100%, rather than you waiting for 20%. Understand your risk tolerance. If you are the type that you are unable to withstand when market is down, you would see sometimes the group is very active when market is down. When you are unable to withstand it, don't get too exposed to it. If you understand yourself, you can even be doing ETFs. ETFs will not drop. It will not drop 5% in it. It's very rare to see it. If it's dropping 5% in a day, it means the likes of Apple, Tesla, and Co. They are dropping almost 10, 20% that day. So that increases stability. And over time, you need to review your portfolio. If a sector, like people are still trying to see the AI sector, whether with some of the news coming out from China, whether it will affect valuation, affect projection. If you have 80% of your stock in AI, then you may need to review your position and reduce it. But it's still early days. People are still trying to understand it. And lastly, keep learning and stay informed. And that is why most people most people that are here is to learn. You could have used your Sunday evening for other things. It is to come and learn. So there will be webinars that will keep holding. There will be to discuss. When you also have questions, you can also put it in the group for people to learn. And for those that are not comfortable, some people also reach out. What I would just emphasize, sometimes the response may not be that quick because I can get very busy at times, but we'll ensure that this is what we do with passion, that we believe it is the fulfillment is to see us take action and grow as we grow over time. So you can also ask your questions. So people have reached out, they've asked questions and they've gotten answers to their questions. You staying informed, stay learning. The group can be busy at times. You just create time. It can be 5 or 10 minutes in a day. Scroll through some of the points that have been made or discussed. We're trying to make money. We are trying to build wealth. It's not going to come very easy. It's going to require time. It's going to require dedication. So spending, whether it's once or twice in a week, to just scroll through the some of the charts to see whether there are 1 or 2 things you can learn from. And that's why we have ensured that for people that have complaints, we've put a channel where you can send your complaint or you reach out to me and I can guide you. So that we want to minimize how busy the WhatsApp platform is, so that people, when they want to read, they can also just read things that will add value. So, and the postings are things that should add value. This is for investment. We are serious minded here. So that is where I would stop. These are some of the resources that Yahoo Finance that we use. You are able to get. I think let me take additional 5 minutes to show us how you can use some of these platform. So I look at Yahoo Finance, for instance. You want to check, so I use Yahoo Finance, Google Finance. So Google Finance, investing.com. So you can, there will be a lot of information that helps you. So you can even have your watch list on it. So you will see that I have my watch list. Sometimes the Magnificent 7 and the ETFs. So I put it here for me to easily be able to monitor the price. We track this, we ask people to buy it. So sometimes you see that it just take a screenshot, and some of the news, I have to also sit down. I try to read some of the news, get market information. These are the list of our speculative stocks that were recommended. Some have gone up, some we're still expecting because we are going long. We are not gambling, it's not short term. So you will see that you can also always set that Google Finance, you're able to get a lot of information. On Yahoo Finance too, you're able to get a lot of information. If you don't have much time, um, okay, this is investing.com, though currently use the Pro, is a paid version, so that I'm able to get more information. That's why I'm able to see results of the companies and do more analysis for the paid version. Yeah, so but these are just we are trying to teach us how to fish and not just give us fish. While we know that we are there to also guide, to also guide us. So that's that's really very, very important. So you see, and as I wrap up now, please, we always emphasize that we buy more on red days. It is an opportunity for you to optimize your return. So you see a stock has been trading at $400, and suddenly that day, if the news, so you're also putting a caveat. If we look at the news on that day and we think that sometimes there can be overreaction in the market, and the business model of that company has not changed, then it's always an opportunity. A lot of people took advantage of COVID. It made people millionaires in dollars, because for me and you, we still paid, even despite there was COVID, we're still using Microsoft. We still paid for subscription. We're still using Google. So a lot of people that understood how market worked, that was the time they were also buying more. So it's important that we note your portfolio may be looking down, but because we are adopting dollar cost averaging over time, it will also improve. Over time, it will also improve. So I would start looking at the charts before I also open the floor for questions. Thank you for listening, and I'm hoping I want us, if you are still a chance to stay, you may learn from some of the questions that will be asked, and we'll be able to answer. We're here to answer all the questions. So thank you very much for your time. So now going to the Q&A session. Let me look at the group. What platform do you use to buy? So in first platform is Optimus by AfroInvest. You buy US stocks. Also AfroInvestor, you can buy Nigerian stocks. There's also Chaka, there's Bamboo. There are also accounts in the US that because there are some stocks sometimes you may not find that you find on some of the Nigerian platform. Yeah, so you can also use any of those platforms. Yeah, thank you. So please, I can't see this. Okay, we've done that. Log in and log off. Sorry, which group? Okay, I'm new here. So you are also, once you're on the WhatsApp group, over time, you also see the information we post. Sometimes it can be busy and sometimes it can be very quiet. Yeah, so but the idea is whatever we post, we ensure that we are providing is something that will add value to people, to people can also make decisions. Any advantage in giving bulk money to an asset manager to manage discretionary? Yes, the first thing, the asset managers, they are professionals. They have managed stock, they understand how stock works, but you need to understand their proficiency. There's always what they will do for you when you say discretionary is that there will be a target return they will promise you. and there would also be a success fee. So if both of you agree that the minimum return is 20%, if they make 40%, there can be an agreement that out of the additional 20%, you will share. There's always a minimum threshold. It varies from companies to companies that you can do discretionary portfolio. But if you don't have the time, the best thing to also do is buy ETFs, buy stocks that have stood the test of time, that you don't have to worry. Over time, they will continue to perform. So that's another way. But if you also, I believe I've been able to answer. If you are trying to confirm maybe which of the asset management firm you want to use, yeah, Afro Invest, we are also very strong in discretionary portfolio. If you can use Afro Invest, and also any of the top asset managers that you know and you are comfortable with. And when you are doing, you need to also monitor so that they don't go and lose all your funds. That means you ask questions. You don't just wake up overnight. And the asset manager is also, because it is not going to make any money if it doesn't hit that target. So there's an incentive for the asset manager to perform. How do US companies pay dividends to Nigerian investors on platforms like Optimus? So because when you sign up, you open an account. They open a CSCS, a custodian account for you. So if you have $10 worth of Apple shares, for instance, when they pay dividend of $1, that may be like maybe 0.5% of Apple shares that you have. That particular dividend will be credited to your Optimus dollar wallet, or whether it's Bamboo you are using, it will be credited. And most times notification is also sent out to you. So when they pay dividend, you're entitled, you're a shareholder, so you will receive dividend. And for some platforms, you can, the likes of Vest, for instance, too, you can auto invest your dividend, that they invest it for. As the dividend gets into your wallet, you get the notification. They use it to buy. If it's Apple dividend, they can buy additional Apple shares for you with that dividend, which is the compounding we are talking about. So it's always encouraged. People are always encouraged to do that. It helps you to grow your investment faster. Secondly, how do I buy ETFs? The same platform. ETFs are also listed with the stocks. ETFs works like stock. They are done in prices. They have prices. They move up and down because they track their baskets. I think that the last time I was explaining what ETFs is like a basket as fruit hamper, different fruits in that hamper, and whatever happens to one of the fruits will still determine how the basket is perceived. So you can see there sometimes Tesla may be down and 20 other stocks are up. You see that there's a balancing. Excuse me. You see that there's a balancing. Excuse me. Yeah. You see that it helps to balance it. So your portfolio will not do badly rather. Like the quantum computing that I'm looking at, that sector may want to, because I don't want to take too much risk. I may want to just buy the ETFs that in the future, if that sector performs, the ETF will also perform, because the ETF will identify maybe the top 50 quantum computing stocks to be in that ETFs. It can be ETF covering the technology sector. It can be growth ETF. It can be, they have QQQ. They have those covering the energy sector. You can, if you feel that there's opportunity in that space, just buy that ETFs. It helps you to stabilize your return. Okay, thank you, Mr. Bello or Mrs. Bello. The tennis, during the long-term period of holding, are there times you can sell and rebuy when it's low, or you just keep holding? I like this question. You can sell if it has gone up. So I'll use, for instance, when I see for my kids account that is not for trading, But sometimes just wake up, I see GTB, maybe I bought it for them at 30, and I see GT Bank at 62. Say, it has not touched this in a long time. I can sell 20% of it and wait. Maybe the day GTB comes back to 55 naira, I'll buy it. I'm not waiting for it to come back to 30 naira. But I know that the way market works, one day it may come down to 55, then I buy it again. So you can always sell when you see it at ridiculous price. Like when Dangote Cement went from almost 300 naira to 760, I was telling some clients, this stock at this level is unprecedented. Why do you want to keep holding it at that level? Some were targeting 1,000. Why don't you start selling in bits, even if you don't want to sell all? You can sell part of it. And by the time everything turned, people stayed in that stock for 1 year. Those that needed money could not sell because it was artificially moved to that price. So when you see stocks at unprecedented levels, take profit out of it, keep the money. I've seen there was a time during COVID era, this is my uncle that invested 20 million then in stocks, and 3 years after, the portfolio grew to about 42 million. I told him, take your 20 million out first and leave the 22 million. Over time, that 22 million also now grew to about 30. It took some. So he would have extracted more than 30 or 40 million from that portfolio, and he still has 20 million in stocks. So you can see that he's been able to optimize the market. So he took out the money and even moved it to fixed income, hoping that the day something will happen to the world, to the market, that things will crash, is going to be an opportunity for him to liquidate his investment and buy again. So that is very key. We need to note that you need to have, when you see those prices at those levels, take profit, keep the money aside, wait to enter them. The ETF stocks, how do you earn there? Is it dividend or when the stocks goes up? So it is both. It works like stocks. You earn money when it goes up. You also earn, they pay dividends. So you know that the fund managers that manages, Vanguard is the second largest asset manager in the world after BlackRock. They manage the stocks. So when Apple, if they have 1 million units, if they have 1 million units of Apple shares, when they pay dividend, they pay dividend into the portfolio, and they distribute it because they look at the number of units that you have. So they will pay you based on the units that you have. So you also receive dividend like you are investing in stocks, and you can also sell. So you buy ETF maybe at $400 and that's gone to 450. It has gone to 500. You can sell part of it. You can take profit. You can take profit from it. So that is the way it works. Please, if it's also not clear, you can ask again. Excuse me. Ultimos keeps telling me that it takes 48 hours. Yes, I know for those that have open account with Optimus. So also discussing, there's a bit of delay in account opening, which they are also we're trying to resolve. To get in, the influx of accounts was unprecedented, and within the next 1 week, all those things will also be 18. So I would just say you should exercise patience. All accounts will be approved. They're getting more hands to also clear that. I've been able to fund. So, but you can also send me your email directly. You can send it to me directly. Like I mentioned, you will also exercise patience. Sometimes when you send message, you may not get immediate response because sometimes I can be very busy and I can be in meetings, but definitely I'll always ensure that I attend Then if you don't get a response, you can also send a follow-up message. So that will be sorted. That's Mrs. Mary Jude. So you can send a message. Mrs. Esther, what stock can one invest in with just 10,000 naira? Is diversification possible with this amount? Yes. The first thing is diversification is possible. You can buy 2, 3 stocks with 10,000 naira to diversify. Don't buy one stock with 10,000. And the list of stock, we're going to update that list and repost. So as long as you are on the platform, you'll be getting a list of stock. We just want to those prices when we started, even this year, on most of those prices have moved up. So trying to see whether they would also come down and see whether there are other new stocks that we can also add. So please, diversification is key. Please, can you buttress more on the ETFs in Nigerian stocks? Okay, this is Dennis. So for ETFs, we say it's like a basket. They work similar way. So we have Griffith, I think Vertiva has ETF 30. That means the top 30 stocks in the Nigerian stock market, they track it. So when they also pay dividend, it's like a fund. See it like a fund. The only difference between ETF and mutual fund is that it trades actively. Mutual fund, is at the end of the market for mutual funds that the price, we call it net asset value of your position based on the unit. But for ETFs, it trades actively like a stock. As the prices of the stocks that is in that particular basket is moving, the ETF is also going up. So you don't have to wait till the end of the market before you know the price. So you can buy, you can sell. That's what how ETFs trade. So the one on the Nigerian stock market, stock exchange or Nigerian exchange, that's also how it works. I hope that is fine. Okay, so Mrs. Bello is on. So I have a couple of questions. What do you look out for choosing an asset manager or portfolio manager partner when you have a small budget, personal finance? Secondly, what do you think about ladder and as return? Their return promise as 20, return is 20%. So first of all, what you look at is ensure that the asset manager is regulated. Look at also the management, the strength of the management that is running the asset management. So you can go on SEC, the Securities and Exchange Commission. Be sure that they are licensed, not just they don't just call themselves an asset manager. Be sure that they are licensed. So that will first give you comfort. Look at the management, those that are running them, what their experience. Those are the things you also need to look out for. And for your small budget, is sometimes what we call small is relative, and that's why when you see some people are asking, oh, how many units or stock minimum units can I buy? It is relative. It is based on the value. On the platform, there are some people we'll give time for questions. Once we're done with this question, we'll take questions directly. You can, for some people, the value of their portfolio can be 100,000. Some can be 100 million. Some can be 1 billion. Some can be 1 million. So that's why we talk more percentage. We speak more using percentage. If 10% of your portfolio, 10% of 1 million is 100,000, 10% of 10 million is 1 million. So that's how you look at it when you are signing based on portfolio. For ladder and bamboo, I know you need to confirm. I don't know the regulation around ladder, but I think bamboo is regulated by SEC. So just ensure that there are any firm you are investing with, they are well regulated. They are 20% return promised. Yes, so when you look at the market, Treasury bills is yielding above 20%. So it's still realistic when they are giving 20%. Is when you look at what instrument is even yielding. If If, or even CP, if people are now giving above that rate, then you begin to wonder, what are they using the money to do? How are they able to make the return? And these returns are per annum. Is when you see platform that is telling you you make 20% in 1 week, you make 20% in 1 month. Those platforms. You have to be very suspicious about those platforms, and you need to run and take out your money. And I think I should also do this. We will not reach out to you to pay money into any account or to get money for you to teach you about investment. You know, when you have community like this, some people want to take advantage of it. Not when we say set up account, you are setting up account with a company. When you are saying you are buying, you are not buying into personal portfolio. Ayo will not reach out to you to say, come and give me money. No. So let's know, will not DM you for to get money from you. So you need to be very careful when someone is asking you to give me money so I can help you make money. Then you need to be very, very careful. What's different between ETFs and equity mutual fund? Okay, I think I touched on it. They operate in the same way based on the units, but ETFs are traded actively. Mutual funds is at the end of market, is based on the value. The fund manager looks at the value to determine the unit. Is there a good time to buy ETFs, or one can just invest at any time? The principle we have adopted is dollar cost averaging. So as you continue to buy, sometimes if you see that market is down, you can buy more. Excuse me, when market is down ridiculously, you buy more. So, but with our principle of monthly investing, if it's quarterly investing you want to do, you will always win in the long run in this market. So there was something I wanted to show us. If we look at the Vanguard 500 for 50-year, let me just show us something. If you even look at it for 50-year 50-year pattern, you would see that this is Vanguard 500, for instance. I want to see the all-time high of the maximum. So you would see that even from here, 2010, that was almost 14 years ago. See the trend. This is ETFs. Is up, down. See this period. This was during COVID. For those that understood the market, you know, you could have been investing here. So when you see it at this, I don't know if you can see my screen, you see it at this ridiculous level that it dropped to at 210. A lot of people packed or invested significantly in the market. Let me mute this person. Okay. Yeah, so a lot of people invested in the market at this time, knowing fully well that things will bounce back. So imagine some people have run from the market at 228 when the ETF was 228. See the way it moved from 228 to 427. And in 2022, dipped again. And see the level where it is now. So you would see that if we even look at year to date, this year alone, you will see that it has still done. We looked at last 5 years, it has, this year alone, year to date, is just done like 2%. If you look at it in 1 year, it's done 21%. So, and this is in dollar terms. If you are making 21% in dollar terms, if there's another devaluation, last year the Naira devalued by almost, if you have invested, use Naira to invest in dollars, you would have gained 69%. Plus this 21, it means your portfolio will be around almost 100% last year, if you had invested last year. So there are two types of benefits that you gain from it. Okay, 20 years ago, I bought FinBank, which is now FCMB. How do I move the paper certificates to platform like Bamboo? You can reach out to them, and they would give you a form to, once, if the house still operating, they'll give you a form that you complete for you to be able to recover your shares. So you would see different. So let's even look at Nvidia, for instance. See, for those that understood the market, so if you look at what NVIDIA. See, for almost how many years? So you see what long term can do. For almost from 2000, for almost 15 years, almost 20 years, it was down at $5. But in the last 5 years, this is almost 120. It means that if you have put $1,000, it will be having $60,000. Even see Tesla. So these are the possibilities, things that are possible in this market. You see, this is Tesla. Look at the return of if you look at the return of Tesla stock maximum. So you would see that it was also very static. That is why some of those stock that we call long-term stock, we are hoping that some of them you can see the boom. If you look at last 1 year for Tesla, you see that it traded almost at 200. People have doubled their money. Those are invested in the last 1 year. So now, yes, you can buy, but when you see it come down significantly again, you take advantage of that. So let me see. What else? How do I fund my stock account without having a foreign bank? So there are most of the platforms in Nigeria allows you to um what will I say? It allows you to fund in naira, then you convert your naira to dollars on that platform. Then when you sell too, you can convert your dollar back to naira at the prevailing rate and take your money. So you don't have to have a dollar account to operate to invest in the US market. Okay, Mr. Nelson, yeah, it was great meeting you. Mr. Norman, the dollar cost averaging strategy, do you have to keep investing in same set of stock with the money you have set aside? Yes, so you can identify, for instance, 10 stocks that you keep building. Apple shares, if you think you have, though, some people say, oh, I already have $1,000 in Apple shares. There are people that have $1 million in Apple shares. There are people that have $100,000 in Apple shares. There are people that have $10,000 in Apple shares. So when you identify those stocks that you think that have long-term fundamentals, just keep investing in them. Then you can set, like I used to say, our speculative stock. Don't let it be more than 20% of your total portfolio, so that it creates a bit of stability. Don't let it be more than 20% of your total portfolio. So just keep investing in those ones that have names. I noticed that most Nigerian vloggers lay more emphasis or pay attention to foreign indices when recommending instead of Nigerian indices. What could be the reason? The foreign, there are two type of gains that you enjoy if you invest in dollars. If there's a naira devaluation, it gives you more revenue in naira terms. Also, they are more efficient. You have more news about them compared to the Nigerian market. Like, we don't have sufficient enough ETFs in Nigeria. There are very few. So it's most people will talk about what they have more information on. So that's the reason. Are there seasons or months we can look out to prepare to buy stocks? And can you give an idea of who stocks to buy? So we're going to give us there's a list. We're going to update the list. Like we've been talking about MTN now. We said it's consolidating at 250. I think before market close, it moved to 255. That's also a long-term stock. Dangote Cement is a long-term stock. We've spoken about that. Presco, Okomu Oil. Some of the banking stocks are trading a bit very high, but when you see them pull back a bit, you can take a bit of position in those stocks. So we'll look at those are recommended stocks over time. Then we have some that we say long-term speculative, that you just put maybe 10% of your portfolio in it or your funds in it. Is there a naira investment vehicle that is truly profitable, especially as none of them beat the inflation rate? We just saw the stock market last week beat inflation. If you check, even if you're in any of most of the banking stocks, you would have gained close to about 30%. A lot of them beat inflation. But we don't, it's not like it's we used to say the performance past performance is not a guarantee of future performance. So we need to look at it. But over time, you see it that it will grow. One way to beat inflation is investing in the stock market. Do I still need an account with Optimus despite having with AfriInvest? Yes. So currently there are two different apps. You can trade Nigerian stock on Optimus, and you can also trade US stock on AfriInvestor. So you need to have both apps. Um, can we get the network is fluctuating? Okay. Yeah, so we'll share the recording later on the platform for those that are unable to attend. So now we want to also now take the questions directly. So you can raise your hands if you want to ask your questions. Okay, so Mr. Rachel, you can go ahead and ask your question.
Okay, thank you very much, sir. Thank you for the session tonight. So, you've actually answered my question, but I did not get what you said concerning Optimals and AfriInvest. Is it that I can have both, or they are separate applications? Thank you.
Okay, thank you. So they are separate applications, and they are both owned by AfroInvest, but they are currently separate. So you use the AfroInvestor to trade Nigerian stocks. You use the Optimus to trade US stocks and mutual funds. Yeah,
Okay, thank you very much, sir. Thank you.
you're welcome. Yeah. Okay. With okay. Owolabi gifts. Hello. Please, you can go ahead. Okay, if Owolabi gift is not Lena expressing.
Hello, good evening.
Yeah, good evening, madam.
Thank
Yeah,
you very much for your session today.
yeah,
My
you're welcome.
question is a little bit out of scope, but I just want you to throw more light on public offers and rights issues. I would like to understand that, especially in Nigeria.
Okay. Okay,
Thank
thanks.
you.
Yeah, so for public offers, we say you companies issue public offer when they issue new shares. So you would see in the last few months the banks have issued public offers. So they are issuing new shares to raise capital. And for rights issue, they are for existing shareholders. So you must have bought the shares before you can claim the rights. Most times, people buy the offer when they see that it's cheaper than the market. And also, right, it is expected that it should trade at a discount to the market. So when you see any company coming up with rights or offer, the first thing that is advisable to look at is it trading at a discount? At a discount is it trading less than the market? If it's not, it makes sense because of the access to your liquidity to just buy on the floor. Yes, we can say transaction charges, but if the difference is less than 5%, I can buy on the floor. You would see the number of months it's taking for some of the banks to list the offers. And then it was some were even trading cheaper in the market than, so if I bought in the market, I bought GT Bank at 44 in the market then, or 45, and it's at 62 now, I might have sold rather than waiting for my offer. So different, some people may look at cost and say instead of you, because you don't pay transaction charges when you buy the offers, they give you the shares, and it's when you sell that you pay transaction charges. So that's just the high level explanation for rights issues and public offers. I don't know if that's helpful.
So don't pay transaction. That's cool.
Yeah. Yeah. Okay. So next person is Owolabi still available to ask question. Okay, next person, Johnson.
Good evening, Doctor.
Yeah, good
Thank
evening.
you for the insightful session. I just want to find out if one wants to open investment account for minors, is it possible for that to be done on the two platforms? And how will it be operated? Will it be operated by the parents, or can the? I just want to know the modalities of opening account for minors, investment account to invest on behalf of minors on the platforms.
Okay, I think so. Based on information, both platforms are working on creating the opportunity for minors to be able to invest. But for the US market, based on the rule, if you are not 18, you can't invest in the US market. It's only in the Nigerian market that you are allowed to invest. So what can be done is that maybe you put the money you invest and just assign and just know what the portfolio can be separated. I think for now, based on the rule, because you have to sign that they are 18 before you can invest in the US market. And for the Nigerian market, you are able to open. What you can do, you can send an email to AfroInvest. I think connect@afroinvest.com. They will open for you manually. You may not be able to trade using the app for now, but they can open the account manually while you send in your mandate. Then over time, I know it's being worked on. You'll be able to trade on behalf of your children. Yeah. Next question. That's Mr. Nelson. So
Hello, good
Nelson.
evening. It's Mrs. Nelson.
Oh, Mrs. Nelson. Good evening, ma. Yeah.
Yes, good evening. I have two. One is a question and the other one is a suggestion. So my first question is it possible to move all the stocks you have in probably different platforms and move all of them into, let's say, AfroInvest, for example? I want to know if that's
Yes,
possible.
it is possible. We call it consolidation. So you can consolidate all your stock in one portfolio, and it's good to consolidate it where you have a visibility. So where you have the platform, you can see your stock and you can have access when you decide you want to buy or sell on it.
Do I
Yeah.
have to send a mail to AfroInvest to do that?
Yes, you can send an email and the requirements will be given to you.
Okay, thank you. Then secondly, I like what Optimus by AfroInvest is doing in terms of this uh, referral package they have. So I was thinking if AfroInvest can uh, incorporate something like that as well, because for the last 3 years, I've been running stocks investment classes and I've taught over 3,000 persons and I've moved all of them to AfroInvestor for the past 3 years.
Oh,
They're up to 3,000 from my data that I have. So if they can do something the way they do it on Optimus, if they can do it like that on AfroInvest, I think it will encourage us that are trying to push
okay.
people into the stock market. Yes. So it's just a suggestion.
No, I think it's a wonderful suggestion, and it's something that I know is currently being worked on because it's owned by the same firm. So it's
Yes.
something that will definitely be done. And so you can reach out on the issue of the consolidation. You can reach out directly to me.
Okay.
Let's discuss. Thank
All
you.
right. Thank you, sir.
Yeah. Um, is it Mr. or Mrs. Uzo? Okay, if they're not,
Okay, good evening. Thank you for this wonderful section. So
yeah,
I want to find out, for someone who is new to this stock trading, I know you've mentioned ETF a couple of times. How do I identify this stock on the Optimus platform? Is it called
yes.
ETF or what names? I don't know. How do
No,
I
when you
identify it?
search, you can search for them. So part of what we also plan to do is we'll give you some of those stocks, but as you grow, as you can also research more. Because if you are just starting, it's better you say follow who know road. Yes, we're trying our best. So we give you list of stocks that you can and ETFs you can start with. So you start with that before you start So don't just go online. Sometimes people miss it. You just go online, there are different reports. Say, oh, this person, they said this stock will grow by 1000%, and you just go and buy it without having much understanding. So if you are new, you want to tread carefully and just follow it. And over time, you build confidence. You also build confidence in our recommendations over time. So when you see it in next 6 months, you see how they are behaving and with our strategies. So market sometimes can also be down, but because we do dollar cost averaging, our target is to be doing something every month. Over time, your portfolio will also improve. Yeah. Thank you. Yeah. So, Mrs. Shola Mustafa. Hello. Or Miss Bello. Mr. or Mrs. Bello.
Thank you very much, sir. Good evening, Mr.
Okay.
Bilo.
Mr. Bello.
Thank you
Yeah.
very much, sir. So I have two questions actually. One question is that I'm just hearing about Optimus by Afro Invest tonight. Like I've been trading Afro Invest for some time, and but I've not really like I basically like run transactions with their platform. So it's kind of like very impressive for me that they have a stock trading platform that somebody can invest in. So I would like to know how that works. And then secondly, and this is more of like it's kind of away from stock trading, it's more of like technical thing. As an investor with your level of experience, um, would you what industry specifically will you consider as easier to run a valuation analysis? See, if say, okay, I want to run a valuation analysis on a number of companies across like different industries, and I have to like choose one, say FMCG or manufacturing or oil and gas. Which one then would you think that is easiest for somebody who is a beginner, you know, valuation analyst to like start with? Thank you very much.
Okay. Thanks. So thanks, Mr. Bello. So the first one is that you can download Optimus by Afro Invest and just sign up, so you're able to trade US stock. So it's good, at least we don't need to talk more about Afro Invest to you because you've been with Afro Invest for long. Yeah. So secondly, valuations. I know we'll still find time to look at how you want to identify those stocks, but the straightforward one are the FMGC. You look at their revenue, you see whether they are growing, and look at their bottom line and see whether they are making money. If they don't make money, they can't pay dividend. So that's really very important to note. I want to ensure that we promise 7 to 9. we So that we'll wrap up at exactly 9. And I would just encourage us to at least we would like to get your feedback or regarding the training. You can drop on the platform, that's on the community platform, on the feedback you have for us, and your and if based on the training they drop your feedback. So we would like to hear, and also others that are unable to join, it will also be good for them to know whether it's worthwhile, so that subsequently they will also be able to join the training. I think the last question we'll take now is Mr. or Mrs. Emmanuel. Hello. Okay, seems is there any other person that wants to ask questions as we wrap up? Let me check. I think there are questions on the platform. Let me see. Up to APF, that's Afro Invest. Bluetooth fund is a money market fund. AEF is an equity fund. So the return vary. Hello?
Yeah, thank you. This is Emmanuel. My network was disturbing me before. Please, I want to find out. You mentioned about 7 foreign stock and 1 ETF. For somebody that have plans to retire in next 10 years and you plan to be averaging, At what point do you suggest the person we stop averaging and watch the stock grow as you can't retire in next 10 years?
Okay, so I think that within next 10 years, these are you can continue to invest in those and build it over time. So what will happen is after when you think you have approached retirement, then you stop investing, then you begin to you sell for capital appreciation. But diversification will be key. You don't want to put all your money in one company. You diversify across those companies and you see them growing over time. How you make your money, or you by then to fund your lifestyle or to fund your expenses, you'll be selling units. You can decide to sell 2 units of Apple shares. You see some of these shares, like Nvidia. For those that followed it, it was restructured at 1,200 to 120. So some of those stocks have been redenominated or restructured. So if they have not restructured them, Apple will be trading at close to 10,000 naira, $10,000 today. But to make it affordable for people, they break it down. Nvidia did 20 for one, for instance. So that's what happened. So this is going to be the last question so that we can wrap up. I appreciate everyone's really encouraged by the desire for us to learn, and really appreciate everyone for creating time to join. Uh, how do you receive your profit from mutual fund? The work is like with price. So when you sell for AEF, maybe you bought at 108 and it moves to 120. If you have 10 units, if you sell 10 units at 120, it means you have made money. It works like shares. For APF is the interest. Every quarter, the interest on that is credited to your wallet. So you can decide to reinvest your interest. It's money market. They invest in treasury bills and commercial papers. So you can decide to also do that. So would like to bring the training to a close. Thank you.